Oh no, it's fine. Okay. All right, it's good. That's good. Okay. Candle trends. Candle trends are mostly noticeable in trending markets. It's obviously right. Whenever you're looking at the charts, you're only looking at to see that okay, is the market trending or not? So candle trends are most noticeable in a trending market. What this basically means is that a candle trend will either start from a support or a resistance. Either candles are going to start moving bullish from supports or they'll start moving bearish from resistances. Best form of confirmation is on the 30-minute and higher time frames. Guys, tattoo this on your hand, forehead, write it down, a sticky note, paste it on the computer, whatever. But the best form of confirmation is on the 30-minute time frames and higher. If the trend is bearish or there is a confirmation at retest, candles will make lower lows and lower highs. Whenever price reaches a resistance and you have a candle closing bearish, there's a very high chance candles will make lower lows and lower highs. In the same way, if the trend is bullish or there's a confirmation at support, candles will make higher highs and higher lows. This is extremely important concept. Extremely, extremely important concept. Right? So candle trends, every trade from here on that you will focus on is going to be based on a trending candles. When candles are making higher highs and higher lows, or when candles are making lower highs and lower lows, there will be no instant where you will be taking a trade when candles are consolidating. It just makes no sense because we're here to make money, and for you to put yourself in the best position to make money or win trades is to focus on candles trending. This is really important. So this is an example of a trending candle, right? You have a bearish candle, let's say it's at resistance, and now you want the next one to make a lower high and a lower low. So this is your trading candle, right? Some people say that, hey, we're going to wait for this confirmation. Man, this is your confirmation right here. This candle closing is your confirmation right here. If this is on a 30-minute or a 1-hour time frame, this is your confirmation saying that there's a very high chance for the next candle to continue moving bearish. Right? In the same way, when we're talking about bullish candles, this is what we're talking about right here. Now, when candles is closing bullish, this is maybe let's say this is your support after like a bearish candle. This is your confirmation. Now, this means if this happens on the 30-minute or the 1 hour, you know that there's a very high chance that the next candle is going to go bullish, and that will be your trading candle. Right? That will be your trading candle. For candles not to trend, we look at something like this. If you see that this candle is bearish, you want the next candle to also go bearish, right? But let's say if you put your stop up over here, next candle goes bullish, it stops you out. Oh well, that's okay because you managed your risk. This is why having a stop loss is really, really, really important. If you don't use stop losses and if you let trades run, man, they will go in a drawdown and you will not feel good. Trust me on that. I've been there and it's not a good feeling at all. In the same way, when we're looking at candles going bullish, you want the next candle to form a higher high and a higher low. But sometimes the probability is not in your favor, and that's totally okay. Sometimes, guys take it very, very personal. They're like, hey man, I had a buy and I expected candle to make a higher highs and higher lows, and how come it went bearish and stopped me out? It is what it is. It's a probability game. There's a very high probability price will continue moving bullish, and there's a low probability price will go bearish. And sometimes you're going to be at the end of the low probability stick. You will get stopped out, and that's going to happen less time you will get stopped out. So the only thing you can control at that point is your risk. Like, what sort of a risk are you using today? So let's continue on over here. And so when candles are trending, this is like, take a picture of this, write it down somewhere. This is simple concept, but it's really important. When candles are trending, they must respect the highs in a bearish trend. They must respect the lows in a bullish trend. And what I mean by this is the candles themselves, they should respect the highs and the lows. I have a question here. What if you get a bullish candle closed at support, okay, but the 4-hour is bearish and the daily is bearish? Do you still take the trade? No. You look for what the lower time frame candle is saying. If the 4-hour candle is closing at support, you can't take a sell because it's at support. You can't take a buy because candle is bearish. Make sense? You either want that support to be broken and make a low and then take a trade, or you want, yeah, so we're going to go over those examples here now. Man, you guys need to relax with the questions. I'm pretty sure some questions you had, which I didn't answer, they were answered in the last slides. You know, so we're gonna answer everything, man. Don't worry. All right. Awesome. So every chart that we're going to look at here is either going to be a 4-hour chart or it's going to be a 1-hour chart, right? So the confirmations are going to be based on the 4-hour or the 1-hour chart. So basically, what's happening right now here, right? First of all, what we see is that trend is bearish, right? Trend is bearish, but at the same time, we are creating some sort of a support down here, and it looks like we have a bullish candle, so it may be forming another support right over here, right? Now, I want some interaction here. Now, when we're looking at these candles, is this a good time to buy right now? People are saying no. Okay, the stop is going to be too big. This is not a good time to buy right now. But because the only reason is that price is moving bullish, we need prices moving. Let's see here. So basically, what's happening is price is moving like this. You need a retracement to happen right over here, so you can take a buy and then price can go up. You know, but the most important thing is that there is clean traffic to the left. You see this candle closed above these candles, and you have clean traffic till over here. So maybe this is going to be an area where price might head off to, you know, if it was to go up. So let's see if we get some confirmations here. We have a candle closing like a small bullish candle like this, right? Let's see what the next candle does. Next candle is closing like a bearish candle like this. There's still no trade. There's no confirmation. And now we have a candle closing like this, right? So would this be a good position to take a buy? And even if some people would say, okay, the range is small. Some people would say, I might take a buy, but the range is small. So let's talk about biases, right? What's the probability that price is going to go up rather than down? You know, the probability is really, really high that price is going to go up. You know, so when you're starting as a new trader, right, you're basically paper trading, right? You're just looking to see that, okay, what's the probability of price going up or down? So this is when someone said that, hey, the higher time frame is bearish coming down, but the lower time frame is telling us that there's an opportunity for price to continue going up. So this is what we're saying. Someone said there's a 63.756% chance price will go up. You know, so that's pretty good. Now the bias is bullish, right? Even though someone's taking trades, someone's not taking trades, someone is just anticipating. Honestly, when we have the New York sessions, more than half of the time, I'm just anticipating trades. I'm anticipating that price is going to move a certain way, right? So let's see what happens here. So if let's say you're taking a trade or you're anticipating a trade, it's very clear since what we've learned so far that the stop is going to be down over here, right? So let's see what happens here. Next candle goes up. Perfect. You know, the bias was right. We waited for these candles to close and price went up. So now if we had our stop loss down over here, now we're moving our stop up over here, right? And then we look next and then we have a bearish candle forming like this, right? We have a bearish candle forming like this with no wick at the bottom. So when a candle is closing bearish with no wick at the bottom, this means there's no range for the next candle to go down, right? And it also, doesn't it also seem like that it's doing some sort of a retest here in this zone, right? Like it's not an exact zone, but it's like a ballpark zone there. So let's see what happens next here. It continues to go up, and it just starts ranging then. So maybe this move up was market open, this was volume push, and then market started to range. You see how you had volume, then range, then volume, then kind of like range here, then volume and range. This is how price moves. Price will move with volume, and then there's going to be some sort of a range. Whenever there's a range, you will see some sort of confirmation within that range that, okay, we might start moving up now. So when price was ranging over here, this was your confirmation that, okay, we might start moving up. Some took the trade, some took a paper trade, some waited. Why did the top of the wicks not put you off, please? Oh, we didn't take a trade. This was just anticipating. Every example that we're going to do here, we're just anticipating trades, right? Step one to being profitable is to anticipate trades. When you can anticipate trades long enough, then you start executing on those trades because your confidence is up. Because now, so for example, I've been looking at US 30 for about a month now, right? I've been anticipating moves on US 30. And I think from June, I'm going to start executing on US 30. So, that's important. Why isn't first pullback after bottom of page a retest? What? Why isn't first pull back after bottom of page a retest? I don't understand. I don't understand what that question means. So maybe this was a retest here. Like we're just anticipating trades. We're just anticipating. So just to keep it simple, we're just seeing if price is going to go up or down just so that we know if we are right or wrong. All right. Let's go to the next example here. Okay. So what's happening at this point? What's the number one thing we see? We see prices ranging. Someone said dog shit. That's also good. But first of all, what we see is this candle, then we see this candle, and then we see this candle, right? So looking at these three candles, can't we see that a support has been formed? Yeah, support has been formed, right? So we have a support formed right over here. Support formed. And then we have some sort of a resistance forming over here too. So at this point, we cannot take a trade because, it's just very hard to take a trade, because we're in a small range. But also it's rejecting down here, so we need some confirmations. Now we have a candle going up into this level. It's at a minor resistance. We can't take a buy because it's at a minor resistance. We can't take a sell because candle is bullish, right? So now we have another candle looking like this. And now we have another candle looking like this. And then we have a candle closing above this area, right? So let's say, for example, now we have this range here. Let's say this range was 50 pips. Would this be a good opportunity to take a buy? Someone said, hell yeah, but if this range was 20 pips, then it would be very difficult to take a buy because someone would say, okay, hey, since we don't have prices to the left, so we don't know how big the range is. But hypothetically speaking, if this was a small range, we would anticipate price going up, but we wouldn't take a buy. If this was a bigger range, a 50 pip range, then someone could say, okay, well, this was a minor resistance, price respected here, price rejected, this candle closed above all the candles to the left, and we have ample range over here, so this could be a better opportunity to take a buy. Yeah, so if this was a bigger range, what time is it? We don't know what time is it. So every example which we're going to look at here, it's going to be a time when there's volume in the market. right? It could be New York Open, London Open, Asian Open. There's going to be volume in the market, right? So let's see here. So yeah, perfect. Next candle went up. This was perfect because this candle closed above the highs, and if you had a stop so far by now, I expect everybody to know where your stop loss is going to be. If you're looking for buys, it's going to be below a bullish candle. What some people do is they put the stop right at the wick. That's wrong. The reason why it's wrong is because the spread can take you out. If price comes down, the spread can take you out. So always have it a couple pips below the candle. Yes. So let's see what happens to the next candle here. And oh yeah, next continues to move up. So if you are trailing your stops, right? Let's say you had the stop down over here. Then you moved your stop below the low of the candle because you're a smart trader and you're trailing your stops below the lows of the candles if you're in buys. And then since you're doing that, the next candle just shoots up and you're like, oh, perfect. I had a nice trade here which broke out. A dynamic entry possibly at bottom of range, maybe advanced entry. Yes. So far, if you are new, I don't expect you guys to use dynamic trades, dynamic risk, none of that. I expect everyone to use simple basic static risk. Krish said the right thing. Let the runner run. Perfect. So you put stops at break even. Once price came up here, you took profits because it's at resistance. We don't know. So whenever price reaches a resistance and you're in a trade, write this down, please. Whenever price reaches a resistance and we're in a trade, we don't know whether price is going to break it or not. We don't know that. So it's always good practice to secure profits. If you want to leave a runner, put a runner at break even, and if it continues on, that runner is going to be your golden trade. At the same time, if price reaches a support and you're in a sell, we don't know if it's going to break support or not. We need to secure profits. Can we place more risk there, or is it a bad idea reaching a resistance? It's a very bad idea reaching a resistance and taking a trade. Don't do that. We don't do that. If you are new, then you do that, but it's the best practice not to do that. We already talked about this. When price is moving up, we don't take buys. We wait for price to come down or create like a support or whatever, and then we take a buy. So how long is this webinar going to be, Raja? I think we're going to go for another hour. So if you want to leave, that's fine. It's going to be recorded anyway. I'm going to place it in the drive maybe by tonight or tomorrow morning. All right. Let's take a look at next example here. Awesome. So what's the bias here? When you look at this, what's the bias? Everyone's saying bearish, is saying downtrend, right? So when we have a downtrend, we wait for some sort of a resistance to be forming, right? So the first things first. First thing is we see prices dropping. So if price is dropping, you don't want to take a sell here. The number one mistake people make is when price is dropping, they take sells. You want some sort of a retracement to happen, and then you want to take a sell. So first things first. First thing is we need to identify our zone. The first zone is going to be maybe right over here, right? Because price broke down, created a resistance, and then it went down. So whenever price is falling down, also write this down too. Whenever price is falling down, it's falling down from a resistance. So you need to mark a resistance. Whenever price is moving up, it's moving up from a support. So in the same way, we have a support right over here because price is moving up. From here, price is moving down, so we have a resistance right over here. So let's see what happens here next. Price is moving down. There's no trade. We don't know what's going to happen, right? So we're still waiting here. Now we have a candle forming like this, like a doji candle. There's no trade. Since what we've learned so far, there's no trade right now. Now we have a candle moving bullish, right? Now, can we take a buy or a sell? I don't thing, so it's going to get pretty difficult because, you have a range right over there. So we have to wait a little bit. Okay, we have a candle moving up now, so, it moved up, so, we were looking for sells, so we're still waiting here a little bit. Price is still moving bullish. Now notice how price broke above this area and it came up to this previous support, right? It came up to this previous support. It created a low. Also, another thing to note is whenever price is trending down, it will create a low. Whenever a low is formed, there's going to be a retracement, and then there's going to be a very high probability that price will retest that low. Whenever price will retest that low, that's the trade I'm willing to trade. That's the confirmation I'm willing to take. So when we look at the next candle, let's see what happens here. Next, we have a resistance forming, right? So now there will be two groups of people. One group will say, sell it. Then another group will say, wait for some sort of a confirmation. This is your confirmation. If this is a 1 hour time frame or if this is a 30-minute time frame, this is the confirmation you're looking for. Because when the next, you need to understand this, guys. Whenever candles are moving with billions of dollars. Every pip moved in a candle is billions and billions of dollars. We're just trading a candle. We're scratching the surface. So if you're trying to take a sell over here, everybody know by now that your stop is going to be above the bearish candle, and you're anticipating the next candle to respect that high and continue moving bearish like this. And at this point, you're probably securing profits or you're putting stops at break even, but ultimately you want price to continue down to retest this low, right? So if you look at there, price does come down and we start moving further down. So when price came down to this support, this is where you are securing. You're securing right over here, right? Because we don't know whether price is going to continue moving down or not. So that's why you're leaving a runner running. You're trailing your stops and you're leaving a runner running. You're leaving a portion of your position run, so to speak, that, okay, if that position keeps on running, I want the most out of that. So then, like it starts moving down. You're like, oh, perfect. My runner kept on running. So I had a good trade. Why the price went down instead of moving up? I don't know if that's a serious question or not, but I think that's not a serious question. I hope that's not a serious question. So would this be valid enough confirmation on 30-minute time frame? Yes. Yes, based on what I've seen, based on what I've traded, whenever that happens, there's a very high chance that this will continue on. So the reason why price moved bearish was we don't know where price is going to go. To be honest, we don't know that. All what we do know is that a resistance has been formed, so there's a very high probability that price will go down. We don't know why it's going to go down. We just know based on probability that it should go down. Man, it could have gone up too. Look at this. It could have gone up. Like the next candle could have gone up, let's say after this one, right? If we had this candle, man, the next candle could have gone up. Where's my candle, man? Come on, Zoom, cooperate with me here. Next candle could have gone like this, but for this to happen, there's a low probability for this to happen. We just go based off higher time frame. Like, what's the highest probability? So when you had that candle close, you're like, okay, there's a higher probability that the next candle is going to go down, and we execute based on probabilities. Raja, each time a candle is formed, we move the stop loss of the runner, correct? Yes. Yes, exactly. So, all right, let's take a look at the next example here. Because every day is not sunshine and rainbows. All right. Now, we have this scenario right over here, right? I think this is a harder example than the previous ones. Yeah, it's very hard. It's very hard. The first thing you see is that candles are moving bearish, right? That's the first thing you see, candles are moving bearish, which means that we have some sort of a resistance forming here, and then we have some sort of a support forming down over here, and it seems like it's kind of like ranging on whatever, but it seems very difficult to trade here. So let's see what happens in the next. So these are all 30-minute and 1-hour time frame examples. So next candle starts moving down, it's coming down to this minor support. We don't know what's going to happen here, so we're probably just going to wait here a little bit. The next candle starts moving bearish. Could we take a sell? I don't think so, because range is not enough. I mean, it's just very tricky. Very tricky. If someone does take a sell, then you would want price to respect the high of the previous candle and then continue moving down. That's what you would want. But since it's in this area over here, it just looks very dirty, very tricky. It doesn't look good at all. Someone's saying buy it. Listen, when you say buy without a candle closing bullish, that tells me you're not taking any notes. So you have to wait for candles to close in your direction. Listen, if you guys don't wait for candles to close in your direction, you're going to be in the same spot you've been since you started trading. We are here to make a change, and you need to make a change in your mentality first. You need to wait for candles to close in your direction and then take trades. You need to make a change to see a change. That's how it's going to work. If you don't make a change, you're never going to see a change. I know a lot of people who are in my group, and basically I know people who started when I started with TED, and they're in the same position they were since they started because they're not patient enough. They don't wait for candles to close. They just they overtrade, they over risk. They're in the same position they were since they started. Me, I've progressed. I know a couple of other guys, they've progressed a lot too. So you have to wait. Waiting, man, you get paid to wait. See? So if you would have taken a sell over here, would have gotten stopped out. It would have been very tough. So the next candle closed like this. Next candle is closing like this, and it's approaching this minor support formed here. Now it gets very difficult to trade. We don't know what's going to happen. And the next candle starts going down, reaches the support, and the one after that breaks down, and it's just a mess. So in this example, there was no trade. It was very hard to trade. I'm a new trader, but knowing myself, I would have taken a sell on the third last candle because it broke the low, did not break the high, and closed bearish with stops above the previous resistance. Right or wrong? I think that's a right idea. That would have been the right idea, but then there was a lot of learning involved too. Whenever you take a trade and you lose a trade, you're always learning something. If you would have taken a sell after this candle, it could have worked. This could have worked. And then they could have taken a sell over here anticipating price to move down, then it could not have worked. So you want a clean range. The reason why this did not look good was because there was a minor support over here. We didn't know what's going to happen, and there was support down over here. So it was obvious. This wasn't an easy example, so to speak. How many candle you want to confirm resistance? Just one. All right. So what's happening here now? What's the bias over here? Bearish. Okay, someone is saying bearish. Paid to wait. Bearish down. Okay, so if we were to take a sell, okay, so would this be the great idea to take a sell right now? No, someone's saying no, bad idea. Bearish. Let's see what happens here. See, this would have been an okay idea to take a sell because we had a wick to fill right over here, and we had a retracement done, support formed right over here, and we had this candle close below the candles here to the left hand side. This could have been a nice idea to take a trade, but if you notice the next candle just wicked all the way down, filled the wick, and then continued moving up, right? So if that trade was missed, now we don't know when to take a trade. Now we're just waiting. Now it's just pretty hard to take a trade. Because, now we're starting to go up, and we're coming into this resistance area now. So let's assume we missed that trade, and now if we are creating a support over here, what's going to be the probability? Now since price is, let me just remove this here. So since we are creating a support down here, what's the probability for price to continue to go up? It's high. Someone said she's going up 100%. Perfect. So if price is going to go up, right? If price is going to go bullish, we need to see clean candles, right? So we see that, okay, we're closing above this minor resistance, right? And there's a higher chance for price to come up to this area and to potentially fill the gap, right? So if that's going to happen, where would our stop loss be? So everybody knows our stop is going to be below this candle, and then we're targeting an area going up right over here. Even though if we're not taking the trade, we're anticipating price to go up. We're anticipating that. So that's what we're going to do here. So let's just start to see what happens next. Price goes up, respects the previous low, makes a higher low and a higher high, and the next one continues up, and it reaches the gap area, right? It reaches the gap area just perfectly. So if you see, this was the gap, price came up and rejected it. Now let me ask you this. What's the probability that price will break up or go down? Do we think that price will, 50-50, right? Because we don't know. Gaps happen at very important zones. So maybe that's a very important zone. That's where the gap happened. So maybe the next candle is now, we don't know if it's going to reject it or it's going to continue to go through it. So this is where you have your runners running, you're securing profits, you're doing all sorts of those things, right? So next candle forms like this. If you were still in a trade, right? If you were still in a trade, would you close your buys at this point? Or you will leave them open? Close the buys. Yeah, perfect, man. You guys are learning. This is awesome. Close the buys, stops at break even, whatever you want to do, and then eventually, price started to come down and just started to do its ranging thing. See how now it just started to range. So this was the perfect move up, going up, because we had clean candles here to the left. So it's pretty good. Pretty good. Nice feedback. I like it.